Hey, what's going on, everybody? My name is Steve Zahnd. Welcome to another Guelph real estate market update. We're going to cover quite a few things. First, we're going to cover what happened in October, what's currently happening in November. And if you want to, subscribe to more videos like this, feel free to hit the subscribe button. Check us out on Instagram. I think the handles just popped up there not too long ago. And as always, this is brought to you by the Zahnd Team Real Estate Advisors. Check out zahnteam.ca to check out everything that we have to offer, as well as all the properties on the MLS, and take a little look at our process. All right, without further ado, let's begin. I got quite a few things I want to cover with you. First, we're going to cover what's on the market. Next, we're going to go over inventory vitals. Next thing we're going to go over sold listings, average days on market, sold price, list price to sale price ratio, the month-over-month view of the average sale price, and then the yearly cumulative report on what it's looking like as a total cumulative report on average sale price, list price to sale price ratio, as well as days on market. All right, without further ado, let's begin. So today is November 15th. Actually, that was yesterday. Today's the 16th, but this data is as of November 15th. And here we go. So let's take a look at what's on the market right now. So as we could see, our 5-year average for inventory at this time of the year should be around 254 units. Unfortunately, we're currently at 68 units on the market right now. So as you can see, a huge shortage in inventory. Same story as always. If you've been following the show for the last little while, you'll see that inventory has been a problem for a long time. And just to kind of put in perspective about what the inventory or product mix is on the market here. So single family detached homes is currently sitting at 42 single family detached homes. That's quite significantly less than our 5-year average of 125. Semis, there's 3 right now, usually 10. Townhomes, there's only 7 townhomes on the market right now when we usually have 38. And there's currently 16 condos on the market when we usually have 43. So that's the inventory mix. If you have any questions about any of this stuff, feel free to leave a comment down below or hit us up on the phone number. We're happy to answer your questions about the real estate market or anything real estate related. All right, let's check out the inventory vitals that I got going on here. So this is a graph of 2019. I'm going to zoom in there for you a little bit so you can take a look. So this is a graph of 2019. And as you can see, the green is properties going into the market and the red is properties leaving the market. And at the end of the year, we see a huge outflow versus inflow discrepancy right there. So as you can see, what happened to the inventory levels, because the inventory levels are gray and the 5-year average is dark gray, you can see that we actually had more inventory on the market in 2019 than the 5-year average. And every single month, it started getting a little bit tighter. And at the very end of the year, we could see this gap completely close, and then our actual current inventory levels started meeting the 5-year average. And we did end the year slightly above our 5-year average. But as you can see, that year saw us lose 41 units of inventory of the marketplace. So this whole inventory crisis isn't just something that happened in 2021. This has been an issue that has been boiling over for the last 5 years. And if you watched my last video about the specifically inventory issue, you could see that it's been an ongoing problem that we've been losing inventory year after year. Same thing here for 2020, and there was even worse because we did have the health crisis here that definitely dipped the marketplace. Very unusual pattern here compared to the year before. But that year we actually saw 95 units leave the marketplace. So we lost another 95 units. So the last 2 years, 134 units if my math is okay. Doing math on the fly is not my strong suit. But as you can see here, that's the trend there. So let's take a look at 2021. And with 2021, we had a massive surge in inventory at the beginning of the year, thankfully, because again, if we look at the gray line, which is the current inventory on the market, versus the dark gray line, which is the 5-year average, we can see we had a huge discrepancy at the beginning of the year. So as opposed to 2019, when we had more inventory than we usually did, we started 2020 with less inventory than we usually did, quite significantly less. So it was really fortunate to see that we got that inventory inflow to meet this inventory outflow demand, right? But as we could see, around May, you could kind of see the inventory spiking up a little bit. So lower, catching up to the 5-year average, catching up a little more to the 5-year average until May, right when the lines crossed here, when inventory inflow and outflow met, that's where we hit our peak. And then inventory outflow maintained more than inflow, and we haven't really been able to add any inventory at all for the rest of the year. So we've been now losing inventory since May, essentially. So we did have quite a bit more inventory. I think the last time we did this check-in, it was about 50 units that we had extra in 2020. So we were starting to build up that inventory again. And now that's already down to 26. And if November is going to stay true to its trajectory that we're currently on, we're actually going to see less inventory. We're going to probably get rid of it all as what it looks like. So hopefully some more listings come to market. And that's why we're checking the inventory vitals to see, the market vitals to see what exactly could be playing out here. And if you want to know how this applies to you or your situation, feel free to call us. Everyone has a unique scenario, but ultimately we need more supply. Whether, in my other videos, I cover how political campaigns that made promises to cut the red tape for the municipalities to start bringing more supply to the marketplace. That's definitely a needed thing. However, being a provincial kind of mandate, we're not really sure how the federal government's going to have control over that. But anyways, anything they can do to cut the red tape, help people bring inventory to market is going to be crucial. All right, so let's dive in. So this is the inventory inflow versus average inflow. And as you can see here in October, we are right now, this is for the total year of 2021. I might apologize. So let me just get that clear. This is for 2021 total. We've had 9.2 homes hit the market every single day. So every day, 9.2 homes come to the market in forms of listings. The 5-year average for homes coming to market on a daily basis is 8.3. So we are seeing a 12% increase over our 5-year average, which is a really good thing. And as you can see here, we pretty much got that entire increase up until the first 4 or 5 months of the year. And now we haven't been able to keep up with our 5-year averages on a monthly basis. So really that inventory spike happened at the beginning, and now we just can't keep up. So let's take a look at monthly views so you can kind of see what's going on here. So for example, in October, our average homes to market was 6.6, and that's obvious here, right? So we didn't have nearly as much as our 5-year average, which was 7.7. So we actually saw close to 15% less homes come to the market in October than we usually do. Unfortunately, though, in November, and obviously we're just 15 days in November, so these trends can shift quite dramatically 15 days at a time. But here we're currently sitting at 6.5 homes coming to the market a day in November, which is 0.1 homes less in October. However, it's a bit higher than we usually see at this time of the year. So it almost feels like the whole market has been shifted. Even in the momentum in our company here, things seem to be picking up now more than they were last month. So interestingly enough, that we are seeing more listings coming to the market in a time where we usually don't see them coming to the market. And if we keep on this trend, this green line right here should be matching this dark line. Actually should be exceeding it based on the numbers here by 11%. So it's a good thing to see. This isn't September, these are October numbers. Sorry, I just didn't update it. So currently, here's the outflow trend. As you can see, we had the big spike in outflow as well, and it started tapering off at the midpoint of the year. So let's kind of take a look at what's happening in the year. So for 2021, we're seeing 7.7 homes sell every single day in Guelph. On average, we usually see 6.32 homes sell every day in Guelph, which is almost 22% increase over our typical year. So we actually just did pass, and I know I'm not going to be jumping around here. We just did pass actually the most units we've ever sold in the city. I think there's only 1 month that's higher currently still. Yeah, 2457. So in 2016, we sold 2,457 homes, and already we sold 2,451. So clearly we're going to sell the most homes since I've been tracking this, and obviously we've always have more homes every single year as new homes are being built. So I honestly think this is going to be the most homes Guelph has ever sold in Guelph's history, is 2021. So that's pretty cool. Definitely going to smash a record this year. I thought it was going to be a lot bigger based on how this year started, but still nonetheless, we are definitely going to sell the most homes that we've ever have. Going back to the vitals here. Where are my vitals at? There they are. Okay, jumping back to the vitals here. So as you can see, this 22% increase is real. We've now sold more homes than we ever have before. So what's happening currently this month? So in October, we saw an average home, we saw 6.3 homes sell per day in October, which was slightly lower than the 5-year average. October was a bit of a weird month. But here in November, again, the activity has picked up again in a month that you wouldn't expect it. So there's 5.9 homes selling a day, and on average there's 3.6. So as you can see, the nice thing about this is that the inflow currently is sitting at 6.5 and the outflow is currently sitting at 5.9, which is a nice little gap that we're creating in our numbers, which should be reflected right here. It's gonna be super hard to tell. Like I'm sure you can't see that. The numbers are so tight that they're still touching essentially right now. So it looks like it's a net zero, but there is technically a small gap up in the green versus the red for inflow versus outflow. All right, let's keep moving on here. Here's a really interesting stat as well. Failed homes, so homes that are failing to sell. Essentially, this gray line here indicates how many homes fail to sell on average in that specific month. And we were kind of keeping pace around here, so the market was kind of acting a bit normal around here, but now all homes that are essentially not failing to sell anymore. So, I mean, we're having a very, very low fail to sell rate. As you can see, we're down almost 89% in the month of November, and we were down 78% in the month of October. And the reason is green is obviously the less failed sales is a positive sign. So there you go. So that's what's currently happening. It looks like inflow is picking up again this month. Outflow is below inflow, which is great, but it's also picking up a little bit over the 5-year average, and the fail to sell is through the floor right now, which is great. So here's the total view of the 2021 market here. As you can see, the inventory is the light gray lines versus the 5-year average, so we've always been suppressed. And as you can see here, it's just getting beat down really badly, and in November we definitely have no inventory on the market. But thankfully, we're getting more inflow than outflow, which should hopefully hold a surplus for this year, which would be our first surplus. Well, if this year would be the third year, first surplus in 3 years. So that would be good to see. Hopefully it can hold, but by the way it's looking, it looked like it could go to zero potentially. So how do we get that number? Total listings in so far in 2021 in Guelph is 2,939. Total that was sold, 2,451. Total failed sell, so homes that failed to sell, 462, net difference of 26. All right, cool. So what does this all mean? What kind of impact is this having on other vital statistics like days on market, list price to sale price ratio? So currently in the month of October, we're sitting at 10. So it got a little bit hotter in October because we were peaking around 13, dropped down to 12, now we're down at 10. Our preliminary numbers right now in November are 14, but we're only 15 days in, so I don't really feel like it's a accurate number until we get the full month in. List price to sale price ratio, it's kind of like hovering around the 107%. So we started at 112% in January, started to dip down, fell all the way to 101%. And then we started to dip back up, and now we're currently sitting at 108%. So these are the month over month views. And what's really important to know, month over month, there's a limited amount of data, limited amount of home sales that happen each month. So later on, I'm going to show you the cumulative view, and then that's going to give you a bigger picture of what's happening. All right. So here's the sold list average sale price, and in October actually, our average sale price just in that month hit 868,000. So that's the first time the Guelph real estate market has ever touched 800,000+ in average sale price, and we just didn't touch it. We blew right through it. From 776 to 868,000. That's an 11.77% increase month over month, which added potentially $91,000 to anyone that was holding real estate in that month. Sure, I'm looking at a monthly window here, so the stats are on a small number of homes sold. It's not the greater scope, which we're going to look at in just a bit. And here, even though the market is technically down month over month in November with a very small sample size of 858,000, still we're in the 800,000 plus average sale price range here. So which is still incredible. It just blows my mind. And here's what the chart looks like here. I'm going to zoom out for you a little bit. So here you go. So this is January 2021 is the green, and January 2020 is the blue. So you can just kind of see the crazy gap that has happened this year in terms of average sale price and wealth gained for people that were in the real estate market. So the gap is maintaining. It kind of closed off a little bit here. So if you bought kind of in whatever month this is here, it looks like August of 2020 to August of 2021, you had the smallest gap in terms of differential. But here again, now it's spiking up to be quite a massive gap. This is one of the largest gaps, almost probably as large as, this is definitely the largest gap. It's $91,000 here. $228,000 year over year, and here it was 168. So this is kind of showing you the gap. All right, perfect. So yeah, any questions about this stuff, feel free to call us. So yeah, let's kind of take a look at a more holistic view. And this is my holistic chart here. So essentially, the gray bars here are how many homes sold in that specific month. So as you can see, January had this many, 141, February 251, March 362, April 295, and so on and so forth. I'll scroll and show you the numbers here. So that's the specific amount of months. So when I was talking about this chart over here, we were just talking about those that amount of homes sold in that specific month. This red line here is the accumulation of the gray bars. So again, 141 plus the 251 is 392. So this is how many homes sold cumulatively in the year so far. As you can see, as the year goes on, things really start flattening out because there's more data, and as you have a bigger data set, the kind of data holds more true. But with that major spike to 868,000, it actually did have quite an impact on the cumulative average sale price. So November really did push up the total average sale price for the year, and November is even having a greater impact here. So November, we pushed up from 749,000 to 759,000. So $10,000 was added to the whole annual average sale price just on these few sales, on 196 sales that really pushed the average sale price up for the whole year, which is crazy. That 196 units had an impact on 2,300 units like that. And then again, the sales we had, just 88 sales in November on the cumulative stat has pushed up average sale price again to 763. So that's what it looks like for the year. And as you can see here, the days on market, it can really start telling the story. We started at 10, went down to 8, 9, 9. So for the entire year, it looks like we're sitting around average days on market is going to be probably going to end around 10 for the whole year. So this whole year, average days on market is going to be about 10 days. And if you look at that, that is one of the hottest years of ever on record here. I really do measure days on market on how hot the market is. From 2014, 34 days. Remember those days, right? A month sitting on the market on average was normal. And then 2017 was a crazy hot year as well, but that only ever touched 18 days. And here we're at 11. It just goes to show what kind of a crazy year we've had this year. And then let's go to list price to sale price ratio. Right, we started at 111, went to 110, and now we're kind of sitting at the 107% rate. So it looks like this year, essentially if someone's asking $100,000 for their property, on average you got to go at least to 107,000, right? So you got to be going at least 7% over. And those are the major stats. So I kind of want to just sum it up here for you, what this year is kind of looking like. As you can see, just going to put a bow on how hot this year has been. 11 days on market, which is hotter than any year here. Our average list price to sale price ratio is almost at 100, is at 107%. And the only year that was above 100% was 2017. And if you remember that year, that was crazy as well. And then the average sale price, getting close to that $800,000 mark, just crazy. That we went from 616,000 to 763, adding $150,000+ almost in average sale price on the year. So essentially, what this means is if you bought real estate in 2020, you'd be up about 150 grand right now. So yeah, I did some math on a video here about what it could look like, if you got into real estate, how you can get into real estate with as little as 5% down. You could get into the real estate market, and the key in real estate is just getting in. Find a way to get in, because if you're able to borrow, scratch together 5%, and you did that back in 2014, today that 5% would have been like hundreds and hundreds % return on initial investment. Probably the best investment you could have made in the last 10 years for sure is into the real estate market. So if you have any questions about how to do that, how to get in there, happy to help you out. I hope you found this video helpful. Sorry, just let me get back to the main camera here. Yeah, I hope you found this video helpful. Sometimes I get into a little bit of predictions and kind of like talk about the news and stuff, but I'm going to save that for another video. If you have any questions, feel free to reach out to the Zahnd team. I hope you have a great day. Thanks a lot for joining. See you later.